Alright, so this is the breakdown video of my trade on GU that I took on yesterday. And I'm just recording this after a 13 hours shift at work, so I'm pretty fucking tired. But I needed to do this, so here we are. So I usually start by analyzing the daily time frame, and as we can see, we were pretty bearish on the daily time frame, making new lows basically and lower highs. But what I saw from the starting of the wick was, so basically the wick started with this candle right here, right? And what I saw was basically that the price was still dropping and still rejecting the EMA on this area and on daily time frame until it reached these levels right here, which are two pretty important levels, which are the previous wick low and also another weekly low. And if we go after that, if we go on the 4 hour, for example, I was honestly also looking to take the long from here, but the price turned fully bearish once it got here. I mean, once it got there, so I stopped looking for a long position from there, and I waited for the next day, which is yesterday, where it took the long position. And after the price took the weekly lows right there, we saw a big push to the upside, which on the 4 hour time frame it didn't broke the previous high, giving us a break of structure. But if we go on the 1 hour time frame, we can see very beautiful break of structure and also the confirmation of the bullish change of structure, basically, right? And returning back on the H4, I usually don't look at the EMA on the H4, but it is really interesting how it reacted off of there, grabbing all of this important liquidity over here, closed above the EMA and starting to react and retest it and retesting off of it until it got away from it, retested it, and then boom, exploded to the upside, just where I got in basically. And again, going on the 1 hour time frame, what we can see is that basically the price, after it took the liquidity off of this important level, it got above so these two boxes basically are the Monday's high and low, which are pretty important levels throughout the week, where we can catch reactions trades, or basically we can catch trades based on the retests of these areas. And in fact, as you can see, price literally got above it, then retested it and reacted off of it, then got on the high, reacted once, twice, and then boom, it closed above it, and then retested it, and then just continued to the upside. And these are all good confluences that you may use on a for your trading. This is what I use mostly. I mean, only actually on GU. And yeah, what I did then was I usually take trades off of the liquidity whips of the sessions, of the different sessions of the day, and the most probable, I mean the sessions with the highest probabilities, for me at least, are I mean, sorry, the session with the highest probability is for sure the New York session. Why? Because during the New York session you can get amazing reversals, especially when there is huge momentum, like in this case. So what I did was I marked out the Asia low, basically, and the London session low. In fact, the price came there just before the New York market open, actually. Went there and I waited for a lower time for confirmation, which in my case I usually use either the M1 or the M3. I was used to use more the M3, but I mostly use the M1 now. And yeah, as you can see again here, just liquidation, break of structure, retest, and then boom, as simple as that. And you have multiple ways to enter here. Like, you can again enter simply off of the breakout structure, or you can enter off of the retest of it, or you can enter using, I don't know, the Fibonacci, for example, trade off of the 50%, or you can either even wait, on a higher time frame, like 5 minutes, wait for, again, breakout structure, entering off of the retest, and whatever. You have multiple ways to enter every single time. And my TP was the 134, at least the first one, the main one, was 134 level. Why? Because first, it was a psychological level, pretty important, and second of all, these two, when you can usually see these blue lines on my charts, usually inefficiencies. And how do I use them? I basically use futures, the future contracts of the sterling, in this case of the pound, and I mark out the inefficiencies. And in this case, as I'm about to show you right now, hoping that I will be able to show you the inefficiency that I was referring to. Just give me a second. Nope. 8 a.m. Alright, there you go. So, as you can see, here are the inefficiencies that I was telling you. You see, you have 0, 0, 0, meaning you do not have the other side of the market, in this case, buying, which is inefficiency. Therefore, most of the times the price will just go to attack those levels and, of course, to fill them. And as we can see right here from yesterday, the price reached these levels and perfectly filled the inefficiencies and nicely reacted off of it. And then, of course, it continued higher, but of course, it can do something like this, especially because we have higher inefficiencies over there. And so that's basically it. I hope you learned something new off of this video. And yeah, and just to show you again, this was my another trade. This was with Momentum, actually, another model that I have, which also got TP, but I honestly didn't take it because of the issues that I've been having with executing all my models and all my assets, because I have 6 different models on 4 different assets, and I'm also planning on adding another one that you can see here, but I literally am not having the time to backtest ideas on it, so it's just in the plans. And yeah, so this was the trade, basically a nice 1-2-10-78R, and yeah, it is. This is it. So I'll catch you on the next one.